to return to surplus. Inflation, though, should be around 0%. Unlikely to endure because we're expecting oil prices to bounce back. Energy prices are the most important reason for the below target inflation. So there we go. The BOE has for a long time said these factors are really just temporary. So that's why inflation should be bouncing back. The forecast for inflation for 2015 is 0.6%. But once again, it's cutting its 2015 GDP forecast to 2.5%. In other commentary, it says that the strong sterling is weighing on UK GDP growth, and we've seen that big appreciation specifically over the last couple of trading days on the back of the election outcome. Once again, the first interest hike should be in 2016, but that's not really news to the market. The Bank of England Governor Mark Carney is delivering a speech on the quarterly inflation report. We don't have the audio just yet. We should be getting it in just a moment. Sterling dipping versus the US dollar after that BOE inflation report, but let's just listen in.
As the MPC had predicted 3 months ago, I've had to write today the second in what's likely to be a sequence of open letters to the Chancellor. And that's because, as you know, as expected, inflation fell to 0 in March, 2 percentage points below target and the lowest since official CPI data began. As was the case in February, the single most important reason for below target inflation has been the sharp fall in energy prices. In March, oil was about 40% cheaper than the middle of last year, and the price of petrol at the pump was down by more than a tenth. Food prices have also dropped, and sterling's appreciation over the past 2 years has continued to depress import prices. Taken together, these factors explain about 3/4 of the shortfall of inflation from target, with the remainder reflecting subdued growth in domestic costs, particularly wages.
So that is the BOE's Mark Carney. You can continue to watch that speech on our UK feed. Meantime, we're seeing sterling down a little bit against the dollar on the back of the BOE inflation report, the BOE cutting its growth forecast.
Now, an Amtrak train from Washington to New York with more than 240 people on board derailed in Philadelphia on Tuesday night. At least 5 people are dead and several more injured. Eyewitnesses say the train, which runs through the heavily traveled northeast corridor, was going into a turn when it started to shake before coming to a sudden stop. Several cars flipped over. Philadelphia's mayor calls the scene horrific.
It is an absolute disastrous mess. Never seen anything like this in my life, and most personnel will say that as well.
And coming up, NBC's Chris Pallone joins us live from Philadelphia for the very latest on the Amtrak train derailment. That's in about 20 minutes' time.
Back to markets, Wilfred, let's take a look at U.S. futures and how we're faring, because bond volatility has been casting a shadow over stocks. The reversal of global interest rates has been a source of concern for investors. We did see a 6-month high for the U.S. 10-year yield. Yields coming off the highs of the day, but still above 2%. We're looking at the Dow right now up about 70 points in pre-market trades, suggesting a rebound in today's trade. The tech-heavy NASDAQ also up by 25 points in pre-market. But of course, the bond market moves mark a stark reversal from what we saw last year. A lot of traders are trying to get to the bottom of what is really driving not only the sharp reversal in bond yields, but the volatility that we've been seeing, not just in the European bond market, but in the U.S. 10-year as well. Now, speaking of bonds, take a look at the German Bund. Remember, it was as low as 0.04% at one point. Analysts were betting that the German 10-year would dip into negative territory, given that the ECB's quantitative easing program